another 30 seconds. We are going live now.
Okay.
We can start now.
Good morning, everyone. Thank you all for joining us today. In today's webinar, we have a panel of young adults who are curious about money, savings, investments, and the stock market. I'm pleased to introduce you to Samriddhi, Reva, Rehan, Advait, and Akash. Children of today are the future of tomorrow. One of the greatest gifts you can give your kids is to prepare them to be responsible and empowered adults around money. Today, we will learn about money, savings, investments, and planning through some fun quizzes and experience of my esteemed panelists. As you all may know, Scripbox is India's most trusted digital wealth management service. At Scripbox, we believe that good investing is not just about choosing a fund, it's about understanding your aspirations and goals, building a portfolio and managing it actively so that you do not compromise on your dreams. We are a SEBI-registered investment advisor. We keep sharing insights, ideas, and content on a regular basis on topics related to investments, aspirations, life goals, leadership, and health. Please visit our website, scriptbox.com, social media platforms, and channel Scriptbox on YouTube. If you like this webinar, then do tweet about it, mentioning the handle Scriptbox. You can ask a question at any time during the webinar by using the option Q&A on Zoom. If you are facing any technical difficulties, you may send a message to the host through the chat option. Once again, use Q&A option for your questions and chat option for technical difficulties. If you're watching this session live on YouTube, feel free to drop in your questions in the comment section. Let's start with the introduction of my panelists. So let's start with Samriddhi, you. Please introduce yourself to the participants.
Hi, everyone. My name is Samantha Sharma. I am 17 years old. I am a 12th grade commerce student studying in Primus Public School located in Bangalore. I had recently done an internship with Scriptbox that has helped me gain some knowledge on financial planning, research, and investment. And I'm excited to be here and learn more from this new experience. Thank you.
Thank you, Samriddhi, and welcome to this panel. Reva, please introduce yourself.
Hi, my name is Reva Shingle. I've graduated from the International School Bangalore last year, and I've just completed my first year at Ashoka University. I'm planning to major in politics, philosophy, and economics, but I'm still deciding. I've launched my own company. It was named Viepo. I did that in around 9th grade. It was a social media venture to help smaller companies grow on their own. Other than that, I've done a couple of I've done an internship, and I think I have a little bit of a grasp on money, thanks to my dad. But other than that, that's all I really know. I'm excited to be here.
We look forward to you sharing your insights, Reva, on this panel. So thank you so much for joining. Rehan, please go on.
Hey, everybody. My name is Rehan. I'm a college student, first year at Christ University, Bangalore. I'm studying communications, and I'm a first-time investor.
Great. So there are lots of, I would say, young adults and children who may be first-time investors, so they can learn from your experience, Rehan. Advait, please introduce yourself.
Hello, everybody. My name is Akash Shankar, and I study in Uptown International School in Dubai. In grade 9, I'm 15 years old, and I love investing in stocks. I invest in stocks. I'm trying to day trade soon. My dad has given me some money to use on investing in stocks.
Excellent, Advait. So we have a young investor on our panel, and we hope to learn from you, from your experience on stock investing and trading, Advait. Akash.
Hi, everyone. I'm Akash. I've just finished my first year at the University of Washington, and I'm planning to study aerospace engineering, currently undeclared major. Yes. So this past year, I came to college alone, and I've been managing my finances. I've been making spreadsheets. So, I wanted to do the webinar to kind of, gain some financial awareness through the webinar.
Great, Akash. Thank you. And we hope to learn from your expense management skills that you've developed in the last 1 year for your college. Okay. So that's my panel, ladies and gentlemen. Let me start right away on this webinar. And this will be a lot of interactive webinar. So please participate on this polls and quizzes. And my panelists will help me in answering some of those questions and also taking this forward. So let me start right away.
The video audio is not there.
Okay, so audio was not there, my mistake. Just a second. Okay, we'll just start right once again.
Bradley, before calling the meeting to order, everyone wash their hands with soap and hot water for at least 20 seconds. That's how we keep ourselves and our friends and our family safe. Remember, kids, the best investment you can make is an investment in yourself. And today, that means practicing safe and hygiene.
The Secret Millionaires Club.
So, yeah, we are in tough times. All of us are working from home or studying from home. So there's just a tip to stay healthy and safe. I hope and I pray for everybody's health and good health and safety. Let's get started with the quiz number 1. So because this is about money, we need to understand why money is required. So here's the quiz, ladies and gentlemen, for all of you. Why is money required? Is it for investments, or do we need it for donation? Or do we need for to fulfill our needs, goals, and hobbies? Or is it all about keeping in the bank? So please take this poll and let us know what you think about why money is required. Results, please. A 91% of people say that we require it for fulfilling needs, goals, and hobbies. That's great. So good to see that result. So this is what we need the money for. So this is just to kind of give you an idea. So my panelists, what do you think of this answer? Rehan, what do you think? Is this the right answer?
Well, I'd say it's all of the above. I mean, you require money for pretty much everything that was mentioned in the quiz. But in terms of one singular answer, as in one specific goal, I'd say that that makes the most sense. We do need money to fulfill.
Great. Yes, so the right answer, ladies and gentlemen, is that we need money for all the 3 needs, which is fulfill needs, goals, and hobbies. So what are needs? Needs can be your, of course, food, shelter, and clothes are some basic needs. So those are the needs that you definitely need your money for. What about goals? Goals could be your college education. Goals could be your travel around the world. Goals could be something that you would like to kind of pursue, whether it's marriage, for parents of marrying their kids, college education or school education, hobbies suppose somebody wants to buy, I don't know, what are the hobbies that you guys have? And I know, Akash, you like to play video games, right? So what do you think? What hobbies do you need money for those hobbies, and how do you kind of fulfill those, right? So you need money for all those purposes, right? What do you think, Akash?
Yeah, you do need money for all of that. For example, for video games, you obviously need either, okay, so you can either play on a console, on a PC. Consoles cost a lot, PCs cost even more. Now, spending $500, $600 on a console is quite an investment, and it's like, do you really want it? Do you really want, and if you really want it, do you have the money for it? So if you really want it and you don't have the money for it, you need to save and manage your money wisely to fulfill those hobbies and goals that you want.
Yeah, so I think you're already kind of started letting out what I'm going to say, Akash. But yes, you are right. We need money for hobbies also. And yeah, Advait, do you want to kind of talk about your hobbies? What do you need money for?
Yeah, so I have this hobby of racing. So when I go-karting, we'll need a go-kart, we'll need a suit, we'll need a shoe, we'll need a helmet. And all those are some expenses to do go-karting.
Great. Yes, so you need money. And what would happen if you don't, if you're not able to fulfill some of these hobbies? Of course, you may not have money. So what would happen in such a case?
Investing?
No, see, yes, you can invest, but certainly if you do not fulfill some of your hobbies, won't you be unhappy, right? So you want money to make sure that you fulfill your needs, goals, and also hobbies. All three are important, right? So let's see, if we need money, then how do we start enabling ourselves to get that money? Okay, so let me just go to the next goal. So good answer, all my participants, about money.
Can you show the screen?
Okay, actually, I want to tell you guys a story before that. You can remove the poll if you want. So I just wanted to tell you guys a story about this gentleman. Anyway, the poll has been taken. I'll take the results of the poll a little later. Can you guys all recognize this gentleman? Who can tell me who it is from my panel? Who this gentleman is? Anybody? Reva, would you know who this gentleman is?
I don't, sorry.
Okay. Samruddhi?
I don't either. Sorry.
Okay. So this is, so all of you must be using Dell computers, right? Or at some point you may have used Dell laptops or Dell monitors or something like that. So this is Michael Dell. And, he started washing dishes at a Chinese restaurant at the age of 12. So, and what was his hobby? So we were talking about hobbies. So his hobby was stamp collection. So he started earning money at the age of 12 by washing dishes at a Chinese restaurant so that he can collect money for his stamp collection. Or he can have money for stamp collection. And he also could look at data differently. So what he was doing is, for Houston Post, he was finding new customers through looking at the data and identifying who would need that newspaper. So in 1 year, he earned almost $18,000. So my point over here is that when you have money, right, you can do a lot of these things. And he was doing this to make sure that he could fulfill his hobbies. Okay. So now we go to the second video. So
Can you play it in the main screen? This is the controllers which is showing up. Can you stop share and start share again?
Okay. Is this okay?
This is okay.
Yeah.
You. Savings का मतलब क्या है?
I don't know, sir. पता नहीं.
Are we talking about financial terms?
Savings.
Necessary, but I don't have any right now.
Savings, none.
I don't know how to answer that.
Money doesn't stay in hands. It just has to get out.
I save memories. I save a lot of things.
अगर दिन का 1 रुपया भी बचा लो बहुत है.
I'm someone who binges on things that I don't need. So I don't really believe in savings until I start earning.
Too much of banking theory. I don't think we've reached that stage yet that we are supposed to save for the future and all. We're still very dependent on our family.
Saving किधर करते हैं? सब तो उड़ा देते हैं. उनको कदर नहीं ना पैसे की.
I try and I fail.
I don't know. I plan on having 2 nice kids who'll take care of me.
Saving क्या कर सकते हैं?
You should ask my dad about it.
Yeah, so we can ask mom and dads about savings, but let's see. I think we already did the poll of that. So why do we need to save money? Is it that big bank balance looks good, or is it corpus for big spends, goals, emergencies, and retirement, or is it for big spends and emergency, and or savings is not required at all? So I think we are all clear that savings is required, right? Because we want to fulfill our needs, goals, and hobbies. And so this is the poll. I would request everybody to take this poll again. Sorry, we have already done that, but please take the poll again. So corpus for big spends, goals, emergencies, and retirement. Exactly. So we need savings for that purpose to make sure that we have money for these big spends. So Advait, what do you think about this answer? Can you elaborate more on why do we need savings?
Oh, I say we need savings because we might have some goals in our life we want to achieve, and we'll need some money to save for that in the long term. We can't just keep spending everything on unnecessary things. I don't know, maybe.
Right. Reva, so one of the things that the video said, we can ask ask dads or moms, right, for savings. And you also mentioned about learning from dad. So what do you think about savings?
So I've definitely learned a lot from my dad. But I think he's always instilled in us, like me and my sister, that saving is really important, especially whether it's an emergency fund or whether it's college funds. And he's always instilled, like, even with my sister, she's just started earning. He's like, he teaches her where to save money, how much money to save, and that stuff I've never picked up from them and their conversations. And even like, I've just started earning a little bit of money, and he's also putting that in me that I need to put it away with Scripbox. I need to save my money. So I think it's something I've always learned since I was young. Yeah,
that's great, and you had that habit instilled in you from the very beginning. So that's fantastic.
Yeah.
Samriddhi, you want to add on savings?
The need for savings, I think
yes.
Everyone should save. That's my personal opinion. Because
is it only also kids should or young adults should save or not? Or they should just spend everything on hobbies or not just needs?
I think you can start from a very young age. If you get like pocket money, it'll start a good habit for your future, because the earlier you save, the more corpus you have by the end when you retire, because it's also your future you're planning for. The earlier you save, the more financially independent you become. So you don't need to be financially dependent on your parents, because they've already done so much for you until your college or wherever. But then you will actually be able to become financially independent and fulfill your own needs by yourself. During my internship, I learned about this thing called the power of compounding, which helped me see that the earlier you save, the bigger corpus you can build if you invest it, or like if you save it in such a way that your money grows. So I think that'll be that is something that everyone should start.
I'm glad you brought up about compounding. We will talk about compounding a little bit later in this webinar. So thanks, Samruddhi, Reva, and Advait. Let's go. So now we have established that we need money and we have to save that money to make sure that, and it's not about always just doing fulfilling today's needs, but also future goals and some of the hobbies and some of the things that you may want to do. So savings help achieve some of those goals, and we'll talk about why it helps to sometimes delay some of these purchases, big purchases that you want to do right away. Okay, so let's go to the third quiz of the day. Should children save money? I think I kind of talked about this. No, because they're not earning, and yes, because spending money is bad. Or no, spending money is enjoyment. Yes, develops good habit that helps in the future. Develops good habit that helps in the future. So 100% people say that yes, we should, children should, or young adults should save money. And my participants also felt the same thing, that we should save money, right? So I will just right away go to the next quiz also, because that now if I want to save money, then do I need to, what do I need to do, right? And one of the things that Mr. Warren Buffett has said, actually, let's go through this quiz number 4. What is the best option for your monthly pocket allowance? So you may be getting monthly pocket allowance. What are your sources of money, right? And how do you save that? And what do you do that with that pocket allowance, right? So is it buy whatever you need immediately? Or is it you save first and then spend? Or you save everything and don't spend? Or lend money to a friend at an interest for his expenses? So what would you like to do when you have a pocket monthly pocket allowance? Save first and then spend. So, Rehan, let me ask you, what are your sources of money? Now, we have established that children should or young adults should definitely save money. What are the sources of money that you have with, that can be used for saving?
Well, personally, I get an allowance from my parents, and well, seeing as I don't really have anything to spend, given that we're all in lockdown right now, all I can do at this point is just save and let it accumulate over time so I can get more for big budget purchases.
Excellent. So do you agree with this, everybody's, all the participants' choice of that you should save first?
Well, I feel like it varies from a case by case basis. Depends on a lot of things, but generally, I think you should save before spending. Unless there's a time restriction, I think you should save before buying.
Akash, what do you think? What are your sources of money, and how would you save? Would you spend first and then save, or would you save first and then spend?
So currently, I don't have a job yet. So my source of money is still my parents' allowance, and I think that saving first and then spending is what I've been taught throughout my life. My dad was pretty adamant about saying that buy whatever you need. If you need it, then you buy it. If you don't, then you can use the money for something else. So that's what I've been taught as I grew up. But I also liked one of the other options, the fourth one, which said lend the money to a friend for his expenses at an interest, because it is at an interest and you're helping a friend get something that they might need or not have the money for. So that's something that I wanted to answer, but it was like kind of a vague option, so I didn't go with it.
Actually, it's a good point, Akash, and we will talk about lending a little bit and why that may not be the best option. I'll talk about it a little later about lending and risk management. Okay, so when we talk about risk management, that option will become a little clear also. Uh, Samriddhi, you want to add quickly on what are your sources and during your internship, did you learn this that you should save first and then spend?
Yes, for sure. I've learned this during my internship. Like approximately 30% of whatever I get, or like whatever my source of income is, I should save. And that right now, I don't really have a source of income per se. I just get money for my needs. And out of that, I try to save as much as I can. And although I don't spend it anywhere, it's just there for future.
So let me go over to the next, to the person who kind of popularized this statement. Okay, all of you recognize Mr. Warren Buffett, right? And he was 11 years old when he started saving. He started buying stocks, and he had multiple shares of City Service Preferred for $30 each. And he was just a teenager. He filed his first tax return, and he delivered newspapers and owned multiple pinball machines placed in various businesses. So by the time he graduated high school, which is 12th, Mr. Warren Buffett had already bought a stake in a 40-acre farm in Omaha, Nebraska. And this is a legend, okay? So don't take it for if it was true or not. I don't know. So the legend is that Mr. Buffett said once that if he would not be a millionaire by the age of 30, then he's going to jump off the tallest building in Omaha. Of course, he didn't do that, and he was kind of he was a millionaire before the age of 30. So I'm glad, and he had already prophetically announced that he would be a millionaire before 30. So that's what saving does. And so once you save, so you have kind of you have money now, you have saved. Why do you need to invest money? So I can just keep it in the bank, right? And is it that I need to invest to provide thrill? So we can take the next quiz and to know why do we need to save? So is it to protect the value of money, or is it to protect the value of money and generate a corpus faster? And investment means I don't need to work. So there are 3 or 4 options here. Please take the quiz and this poll and let me know what you think about why you need to save or why you need to invest after saving. Sorry. So what do the results say?
Anup is facing a little network issue. We'll join in another 2 minutes. Samriddhi, you can share about your experience about your experience in the internship. When you were doing internship, what did you learn about finance, investing, or maybe markets, so that we can ask questions or answer questions later?
Okay. I basically learned about like financial planning and research and investments, like the different approaches to how you can choose a stock or how you want to invest. Like when you want to invest or like save, should you save with the intent of just growing a corpus, or should you let the money grow by investing? So like in the future, like everyone's heard of inflation and how the prices are rising. But so if you just save, the value of your money will like decrease in the future because of the inflation and the rise in the value of money, the rise in the prices. So your money that you have actually saved will actually be worth lesser. So if you actually invest, then your corpus or like your money that you have saved will actually grow. And because of that growth, your money will actually be worth more than the inflation and you'll be able to buy more. That is, I think, what I feel is the most important reason for you to invest rather than just saving. And I learned pretty much a lot about that and how you should assign like percentages of your income to saving. Like 30% of your income should be saved, about lesser than 35% of your income should be like above 35% of your income should be spent, and some values like that that helps you budget your spending, savings, and all of that.
And anything on market? Did you learn about market, how markets behave, or maybe when you invest money in the market, what happens to your money?
Like in stocks?
Yes.
I think Advait can give a better idea about that, honestly, because I am not very.
You can ask Advait. Advait, you
Yeah.
have experienced investing, right? So how does it,
Yes.
like when you invest money and it goes up, it goes down, and how do you handle that?
Can you say that again?
So I'm saying when you invest money in the market or stock market,
yeah,
when it goes up or it goes down, and let's say your value of money, what like what you are thinking when you are investing in the market, what should be the aim when, let's say, if you are a beginner in investing into the stock?
Okay, so if you want to invest like for, let's do say a 3-year term, you want to invest money for at least 3 years, you can invest in different company stocks. You should not just invest in one, which is diversification. So that just in case if one stock, let's say you bought 5 stocks with $2,000. No, let's say we bought a 10 companies stocks, and in the 3 years time, one company's stock really goes down badly, but the other company's stocks go up. So that means you have lost from the other company, but the other companies will actually give you a profit. So diversification means like you need to invest in many, not just in one. In long term, I mean, short term trading, short term investing, like 3 years, 4 years, and like that.
So we have Atul joined the panelist. We have some issues with, I think, Anup's network. So I think Atul will take it forward now. Till the time Anup is not there.
Hi, guys. Yeah, hi, good morning, everybody. My name is Atul. I'm part of the team at Scripbox. I'm also here to embarrass Reva. But apart from that, yeah, thanks everybody for being on the panel. And as we say, from a Scriptbox perspective, let's try to save the situation with the actual host not being there. So we'll come back to we talked about why it's necessary to save. We talked about the importance of money in our lives. We talked about the utility of those savings towards investing. So we'll go around the panel table and ask them their views on possible investment options. Sorry, I missed a bit of it. This might be a repeat, and I apologize to people listening in, but I'd love to hear from each of the people, 5 of you. What do you think are the investment options available for you at this age or for young adults? So how would you go about investing, since we're talking about investing? Samriddhi, let's start with you, and then we'll ask the other 4 panelists. You're thinking about investing. What does it mean?
So investing is basically like letting what you saved grow. So you have a bigger corpus at the end of whatever term you want. For kids, I don't know, for now we have, we can make our own bank accounts. So we can invest in fixed deposits, recurring deposits, because they have a higher interest or a higher rate of return than just a savings account. And I think for kids, that's basically more or less that. But if your parents are looking for your kids, and then they can invest in a lot of things like mutual funds, ULIPs, which are unit-linked insurance plans, and a lot of things, stocks, bonds.
Okay. Good. Thanks, Samriddhi. Over to you, Akash. What are the options available? So you talked about fixed deposits being better than savings account, and that actually is a very good concept, Samriddhi, that every option you look at should be better than, and I'll explain this a little bit further, but yeah, that's a good answer. But over to you, Akash.
Okay, what's the question? What are my options for investing right now?
Yes. What are the options for investing? So what is the difference between savings and investing, right? We talked about saving, we talked about investing. So what do you conceptually understand the difference in the two? And what are the investment options available to people?
Conceptually, how I understand it is savings is taking a part of your source of income and putting it aside to, saving it for other expenses, whatever they may be, whenever you need them in the future, emergency funds, bigger purchases. Investments, as I understand it, is protecting the value of the money, as the option was in the poll, because as inflation works, because as more money is produced, the value reduces. So investing is safer than keeping it in the bank, because the rate of inflation is faster than the rate of interest that you get from the bank. So investing in companies that you or your financial advisor sees projected growth in is actually a much safer option. So I think that investing and diversification, as Advait said, is the best option. But as it goes for young adults where we don't have that much experience, I think it's nice to talk to some other people about what their options were.
Thanks, Akash. That's very useful. Advait?
Yes. So, can you repeat?
I'll repeat my question. Akash has explained, Samriddhi talked about fixed deposits. Akash talked about the investing is for your future needs. Savings is keeping the money aside. You could put it in a piggy bank. You could leave it on your table. You're not spending all that you earn. Then you obviously put it to work for you, so it grows over time. And there are very multiple options. He says trust a professional. So I'm just repeating what, and otherwise your options on, since you're a trader, I would love to hear about your thoughts on what do you understand by the word investing?
By investing, I mean, I think it's that you're taking your own money that you think you can, it's your own money that you can risk it to go, like it can go down, go up. It doesn't matter. You can use it. If it goes up, well and done for you. But if it goes down, it still doesn't matter because it's your own money. That it's like it's money that you left aside for you that you can use. So if you invest in stocks, it can go up, it can go down, but I suggest we should invest in mid cap and small cap stocks, which means like startups and companies that are still growing, so that they once they grow, that you can like I don't know how to say. Once you grow, like once you invest in growing companies, once it finally reaches a point that you want it to reach, you can pull out your money so that you earn a high profit.
Okay, thank you. I'll talk to that in a little bit, Advait, why that's probably not the appropriate strategy for investing, but we'll come back to that in a minute, Advait. Over to you, Rehan. We can't hear you, Rehan. You'll probably have to mute.
Hello?
Mute. Yeah.
Can you hear me now?
Yeah, we can.
Could you repeat the question?
I'll repeat the question. What do you understand by the word investing? Because that's the whole purpose of this workshop. Just want to get the panel.
An idea.
Yeah, and then
right. Well, I'd say investing is putting increments of your money into different assets and seeing a growth come.
Okay.
That's what I understand.
Thanks. Reva, over to you.
So I think you've always taught me that like investing is like saving a chunk of money and making sure that it grows over time. Suppose like my university fund, I'm sure it didn't start the way that it is today. You started with a smaller chunk and you invested it and made sure that it grows into a bigger fund. Even today, me saving money that like I would have spent on university, it's like growing so I can use that bigger corpus of money later in my life and use it more like effectively. I also think there are different ways of investing. I don't know how you think about what you think about it, but like take, for example, people invest their money in gold or in jewelry, and they think that's a reasonable investment and something that like grow in value later on. They can sell it later on in the future.
Okay, guys, I'm back.
Sorry,
I'm so sorry with the technology mishap that has happened, and I hope all my panelists were keeping all of the participants entertained. Okay, what did you guys do?
Anup, sorry, I interrupted. I jumped in and said, okay, let me bore the panelists and the audience till you came back. So I'll drop off. Just to wrap up a question I asked Anup, I'd asked the panelists, the young adults, to tell us about what they thought was investment. So just to sum up, I'll just to clarify the way we think about investing, and this is for young adults and for anybody listening in. Investing is taking your savings and then putting them into different instruments or asset classes to see them grow, and they have to grow to beat inflation. Investments is not necessarily, it can be an option as well. Trading or investing in high risk assets is typically not what we would classify as investing. Investing is, you could, like Reva said, in gold, could be in fixed deposit, could be in the stock markets, could be in debt instruments. So anything which allows your money to grow over time systematically is investing, but I'll not get into the complexity of different instruments. And since I'm not the expert, I'll hand it back straight away to the real expert, Anup Bansal. Thank you, guys.
Thanks Atul, for jumping in and holding the fort. So thank you so much.
Again. Sorry. Ankit, you can drop me off the line. All yours, Anup.
Okay. Yeah, so I think we were on the poll, and I'm not sure what the results of the poll were. Okay, so let me just. So the result of the poll were protect the value of money and generate the corpus faster. Yes, so that's right. And I'm not going to kind of ask the question to my panelists right now because in the interest of time. But yes, the answer is correct, which is to protect the value of money and generate a corpus faster. So how do you basically lose the value of money? So let me just show you guys something about losing the value of money. Can you guys all see the screen? I'm sure you can, right? So what is inflation? Here's a dairy milk chocolate that you could get maybe 10 years or 20 years back. And now for the same price, what is the dairy milk chocolate that you get now? Is it probably a smaller one? Then if you see in terms of Lay's chips, so do you guys all like chips? I'm sure all of you like chips, right? Earlier, probably there used to be 40% air, 60% chips. Now the amount of air has gone up in the chips for the same price, 70% air and 30% chips. So essentially, if you see, money loses value over a period of time. What you could buy for 100 rupees today, you cannot buy the same thing for 100 rupees, maybe 5 years down the line. So let's take an example. Okay, let's take an example of video games. So suppose a video game costs 5,000 rupees today, and you decide, and you have 5,000 rupees, but you decide to just keep the money with you, right? And you do not want to invest it anywhere. You just want to kind of keep it with you, maybe in the bank, or maybe in just like in cash. Okay. Now, after 1 year, if you want to buy that video game, and if the video game has become 5,500, you have only 5,000 rupees left for you with you. So you cannot essentially buy that video game because money has lost value. Essentially, when prices increase, money is losing value. For the same amount of money, you are getting less goods, or you're getting less things, or smaller value. So like in this case, if you see inflation, because of the inflation, you're losing the value of the money, and your dairy milk is the size of the dairy milk has become smaller, or you're getting more air in your packet of Lays or packet of chips instead of getting more chips, right? So that's what happens when you lose the value of money, and then so you need to invest not only to protect the value of money, but also you can grow the corpus. So suppose you invested that money, that 5,000 rupees that you needed to buy a video game, and you ended up making that 5,000 into, let's say the markets did well and you made prudent choices for the investment, you ended up making that 5,000 to 7,000. Now, you have not only protected the value of money, you've also grown the corpus. So by investing prudently, what you've done is you've grown the corpus, and now instead of getting a 5,000 rupees something, another game may have costed a little higher value, maybe a better game, or maybe something that you always wanted, which cost 6,000 rupees. Now, because of inflation, that 6,000 rupees has become 7,000 rupees. Now you can afford that game, right? So earlier you could not afford that game because it was 6,000, you had only 5,000 rupees, and you wanted to wait for that better game or the different game that you wanted. But now, because you invested prudently, now a keyword is investing prudently. Okay, it's not about, and I think Atul mentioned about this in his comments, taking the right amount of risk. So in choosing investments in such a way that you invest prudently, you don't take undue risk. And when you have invested prudently, that 5,000 became 7,000. Now you can afford that better game that you wanted to have, right? So that's what value of money has to be protected, and you can also grow the corpus. So let's see. Once you have saved money, and how do you kind of, what are the mechanism of saving that money, or what are the mechanism of investing that money? So now we have established that you need the money. You need money for your goals, needs, and hobbies. You need to save for that. You need to invest also, so that you can protect the value of money. Now, once you have protected the value of, or once you are protecting the value of money, now what are the ways that you can start to invest? Okay, so here's the poll for you, all of you, and a term that I would like all of you to try it out. What is SIP? Wow, 90% of people say systematic investment plan. And I'm so glad my participants are very well informed. And I don't know the mix of the audience right now, but assuming that most of them are children and young adults, there's a lot of, I would say, already information available, or people are already aware. So a lot of awareness being there. So I'm really, really happy about that part. So systematic investment plan. Advait, can you tell me what is a systematic investment plan?
To be honest, I just guessed that answer because that was the most obvious.
Okay.
Yeah, so
all right. So it was a
really
guess, and the guess was like, though there is a 25% probability of that answer being right, but you were right. Reva, do you want to take up that question? What is systematic investment plan? The answer is right, but what exactly does it mean when you say systematic investment plan?
Again, I'm not too sure. Like, this is completely me guessing, I think.
All
But
right.
I think it's making sure that you have structure with what you do and you don't go into investing blindly. You go into it with you have plan, you have like, it's systematically, as the word, like as the name says, it's systematically done, and it's made sure that it's structured to grow effectively and grow well in the future. Because it is easy to like haphazardly invest your money and do it randomly based on whim or based on what looks good in the moment. But I think making sure that you have a plan for the next couple of years and not just a short term, but a long term plan is really important with investing.
Sure. Rehan, do you want to take up that question? What is systematic investment plan?
I see it as a system or a structure that you follow when you invest in something. I'd say it's more of a roadmap of what you'd like to invest in.
Okay. So let me just explain systematic investment plan. Systematic investment plan is, there's a system, right? So the key words are systematic investment plan. All three words are key, right? And I can also say सबसे important plan, right? Just you can also treat it as सबसे important plan. Systematic, there's a system. Of course, it's for investment, and you have a plan for some time. So what you do is you create a system of investing a fixed amount of money, let's say regularly, in a investment or in an investment or a set of investments. So for example, let's say you choose two investments, and I'm just referring to two investments right now. We'll get into what those investments can be. So let's say we are referring to two investments, and you decide that I want to invest in these fixed amount every month. So what you do is you set up a SIP, which is systematic investment plan, and those you will be investing your money, let's say 1,000 rupees each or 2,000 rupees each. I'm just taking small amounts right now out of your pocket allowance or whatever sources of money that you have into these investments regularly. Okay, so there's a plan for a certain time that you invest. So what happens is, what it does, right? When you are investing regularly, what it does is here. Okay. Can you guys see this? Sorry. So if you see this, drops of water make an ocean. So you're investing small amounts. Okay. And suppose today that investment value is 100. Tomorrow it is 80, or tomorrow it is 90, or next time when you invest it is 90. So you do averaging of the cost. You are not trying to predict whether the market is going up, whether the market is going down. So let's say we choose a stock as an example, and Advait does stock investing, right? So today, some stock that he's investing, it's at 100 rupees, okay? And tomorrow that stock becomes 90 rupees. So you can average that, okay? So over a period of time, then you also automatically are saving. And then you see the power of compounding. So we'll talk about power of compounding. So these three things work in your favor when you are doing investment, systematic investment plan, okay? And it's very important that you do that. So compounding can work for you. So we talked about that you need to protect the value of money, and you can also grow the corpus. So let's say you have the savings discipline and you start saving a certain amount. so let's say you need I'm just going to pick a number. Okay, so you need to save 10,000 rupees a month. Okay, so just whether that amount is right or wrong, we'll not get into that. To have a retirement at the age of 60. Let's just take an example. Now, if you start saving less than 10,000 rupees a month, you will have to delay your retirement. You'll have to work more. If you start saving more, let's say 12,000 rupees a month, you will be ahead of plan. So probably you can retire earlier. Maybe you can retire at 55. So what happens is that compounding will start working for you because not only because of savings, but because you're saving that extra, your money is getting compounded. That extra money is also getting compounded. Okay, and you're going faster and faster. And if, in fact, you'll see the effects of compounding with an example. Okay, so let's see, if we want to invest, what are my sources of, or what are the things that I can invest in? Is it a car? Is it a gold? Is it gold, house, or mutual fund? So investments, what constitutes an investment? So here's a poll for the audience. What out of these four, three are investments, one is not actually. So I would like the audience to take that poll and tell us what is not an investment. Car is not an investment. So, Akash, why do you think car is not an investment?
I think a car is not an investment because its value depreciates, whereas the other three have potential for increase. So a house, you're essentially buying either the house or the land, and both of them can increase in value as the demand increases for land or houses. And mutual funds is basically investing. So all the other three options were had potential for growth, whereas a car depreciates value, as I said.
Thank you, Akash. Somebody, do you agree with that?
Yes, I actually do, because like cars have, like the more they use, the lesser they're worth. Even if it's a day old, the amount you bought it in, you won't be able to sell it in the same value because now it's secondhand. So like the car's value depreciates. It has a lot of extra costs with it, like overhead costs.
So that's the right answer. And I think somebody can say that car has a value, but yes, there is a value for the car, but it depreciates. Okay, so it's a depreciating asset. You can say that, and that's why it's not an investment. Of course, that doesn't mean that you should not go and buy a car. The car can be also, but you should understand what is an investment, what is a need, or what are your requirements. The car is more like a need, or car is more like you can say something that you need for your transport. And today, for many people, all of you would know, with some of the services that are coming like Uber, Ola, people are even reconsidering whether they need to own a car or not, because the transportation problem is solved, right? So the need to go from one place to another or have a car to go from one place to another is already solved. So you need not have a car if you really, but some people love to drive, for example, or some people love to go for long driving. So in such a case, yes, car, it can be a hobby. So you can buy a car for long drives, right? So that's, yes, everybody's, all the audience is right, that car is not an investment. Now, if car is not an investment, we talked about gold, we talked about house, which is real estate, because house generally, like they appreciate, land appreciates, mutual funds. Let's constitute what a mutual fund is. Okay, so before we go into what a mutual fund is, right? Let's take this example, this poll, okay? So what is stocks? Stocks generally refer to quantities of food stored in a warehouse, shares of companies for part ownership, loans given on interest, or clothes in a store. Answers, please. Shares of companies for part ownership. Great. 100% people think that it's shares of companies for part ownership. Advait, we'll ask you, because you are a stock investor. Is this right? And can you elaborate on it, please?
Yes, it is right, because when companies feel like they can publicly allow people to invest, they will just like we're investing in the stock market now, they will allow people to invest and be have part ownership of it. So yeah, another term is IPO. They make their companies IPO. I think that means publicly investable.
Yes. Do you guys know what IPO stands for? IPO stands for initial public offering. So essentially what happens is when a company starts, let's say it has certain owners. So let's say you and I, Advait, decide to start a company, okay? And we have ownership of 50% ownership. And then we grow the company, and then we decide to then get more owners. What we say is we list that company on the stock exchange, and we initially float the stock, or we give out some of the stock. So we give some of our ownership to some other people, and that's when it gets listed on the stock exchange. So that's called as initial public offering. And when you are trying to invest in stocks, why you are trying to invest in stocks is not only for the current value, but also for the future growth. So keep in mind, it's a growing. So remember, we talked about investments growing over a period of time, not depreciating. And you want to grow the money so that you protect the value of the money. And when you protect the value of the money, you should be doing better than the inflation. So what happens is when you invest in a business, you participate in the growth of that business, okay, in the future. Now, Reva, you have started a business, or you have been an entrepreneur, okay, helping companies with their social media marketing. What was your experience of starting a company? And I'm sure, like at some point you may restart, right? And you will float that stock, and it'll go IPO, and big lot of money. So what was your experience starting a company?
So personally, like it was an extremely rewarding experience. I definitely learned a lot. With the financial aspect of it, I did get a little bit like a corpus of money from my father to start up a website and just like invest in my learning in the process. So whether that was doing like different courses and just like improving my own skills. Maybe one day I hope one day I'll start a company that I'll be able to have like people buy stocks in and, have an IPO and all of that. But from my experience, the entrepreneurial experience, and especially watching my father, I think it's definitely rewarding, and it's definitely like a growth process, and it takes a long time. But yeah, that's pretty much it. I didn't do too much with the financial side of the company because I did only run it for a short period of time.
No, but that's good. That's a good experience, actually. And definitely when you start another company, right, and you float the stock, count me in, okay, for buying the stock. So all of you would have ambition or to start a company. And what you would want to do is you would want to grow that company so that others become interested and they want to participate in the growth of the company, right? So that's what stock is. And what is mutual fund? Mutual fund is a scheme or a fund, or an expert offers that fund where they will be selecting stocks for you. Okay, so how does it work? I will not get into that too much detail over here, but mutual fund is, you can say, a group of stocks that somebody offers to you as one package. And because you understand or you think that they are experts, or you believe in their expertise, you buy the mutual fund. It's like a basket of stocks that you're buying. And you don't have to then go and select the stocks. So for example, Advait, how do you select stocks today? You had mentioned to me earlier that you select stocks in a particular way. Is it a lot of work that you have to do? And what are the things that you rely on for selecting stocks? Audience, we go a little bit over time. I'm so sorry for the delay or for the interruption. So we'll just try to wrap it up in another 15-20 minutes. Yes, Advait.
Yeah. So some companies I know, I just go to Google and search the company's stock price, and then I check the previous month's stock price if it was gone down or gone up. And if it had gone up in the previous months and if it had come down, I would think of investing now because there might be a higher chance of going up again.
So you have a way of looking at the previous prices and deciding based on that. But also remember that when you're looking at previous, you may have heard this term, past performance is not a guarantee for future results or future performance, right? So you not only want to look at what the past performance is, but you also want to look at the outlook in the future, which can be, there are modeling tools available. There's an art part of it. So there's a science part of it. You can say there's an equation, there's a number. You can say there's the past performance, the values, how the company has performed in the past. But that's only so much you can use it for predicting the future, right? So what happens is when you want to predict the future, you need to look at what the future prospects are, how the market is going. Is it this sector is going to do well? Is this company making the right choices, or are they innovating on the products, for example? Because today's products may become obsolete tomorrow. So what is earning good today may not be earning good tomorrow. So are the companies innovating enough to stay as a market leader? Let's say they are a market leader. So there are a lot of these things that you need to consider when you are identifying the stocks. And a mutual fund expert, a person or a company offering mutual fund, right? They would be doing all that work for you. So what you do is you rely on their expertise. You also can have an advisor, let's say, right? So for example, Scripbox has, we are advisors, right? So clients work with us to understand what the future may entail. Okay, so it's not only about investments, also they invest with us because they want to understand, they want to make a plan, they want to grow the money in a manner that risk is optimized. Okay, so let's go to the next poll. So investment require regular savings, diversification, patience, all of the above. Okay, so it's all of the above answer, right? I want to tell you guys a story, okay? In this. So this story this is the right answer, of course, that you require regular savings, you require diversification, and you require patience. So let me just elaborate quickly. Regular savings we talked about through SIPs. Patience we talked about because there is a time involved in this. Okay, so I'll talk about that patience part in a bit. Diversification. What happens if you just invest everything in one stock or in one mutual fund or in one investment class? If that investment class doesn't do well, you can lose a lot of money, right? You can make a lot of money, but you can lose a lot of money also. So what you need to do is you need to plan it out in terms of diversification. You need to plan it out in terms of making sure that you invest in various, it's like you don't put all your eggs in one basket. Okay. What happens if that basket falls? All your eggs will be broken, right? So you need to make sure that you diversify enough. So there's a concept of risk that I want to explain to all the participants and to my panelists. Okay, so quickly we will. So what is the risk in investment? Now here's the market in the last 6 months. So you can see market is going up and down, okay, in the last 6 months. But let's see how the market has been in the last 20 years. So here's the trend you can see of the market in the last 20 years. And generally, besides that, there are dips at individual points, or let's say, if you see this 2008. Now, some of you may remember or may have heard about it from your parents that there was a big crash of stocks in 2008. And there was a crash last year also, where markets fell by 40%. If you see in the volatility in the last 6 months, it seems quite high, right? So what is volatility? Volatility is the change in the market on a daily basis, right? So market will the fluctuations in the market. And because of the fluctuations, what happens is your investment value will keep changing every day. It'll not be linearly going up. Some days it'll go down, some days it'll go up, right? And in the short term, it may feel a lot. Someday it may go down a lot. Someday it may go up a lot. Someday it may just remain flat. So in a short term, you may feel that there are a lot of variation in your portfolio. And if you start looking at your portfolio every day, you will feel that, hey, this is like really like gambling. But if you see in the longer term, market has a upwards trajectory. And even like a 2008 crash seems like a blip, seems like a small dip at this point. Of course, at that time, it seemed like it was a big dip. And in percentage terms, it was a big dip. It was almost like 60-70% at one time, right? From the highest to the lowest point. But today, if you had remained invested and somebody got out of the market at that time, then they would have lost money. But if they were patient, so we talked about that quiz that you need to be patient in the market. So if you're patient and if you have the long term, you will most likely be a winner. So that's one thing that you need to remember, that why do you need to have a long-term outlook on the market? Second thing is, why do you need to diversify? Because when the market, suppose, let's say stocks are not doing well and gold is doing well. So what happens is it reduces the effect of one asset class on your portfolio. So if you see in 2008, this is a trajectory, right? You were talking about. Now, imagine you invest 100% in equity. Equity is your stocks and mutual funds, which is your companies that you are staying in or investing in, right? So we talked about what is a stock. We talked about what is a mutual fund. And let's say you invest everything in 10 stocks or 5 stocks or 2 mutual funds or 3 mutual funds. So this is the actual performance of your portfolio over the last 20 years. This is how you will see your portfolio will go up and down. So you can see in the year 8, which was 2008, your portfolio went down significantly. But what if you did only 50% equity and 50% debt? Let's say you invested in debt. What is debt? So I think there was a question that you can lend money to your friend. And Akash mentioned that I can lend money at interest to my friend. So suppose he lends money to his friend and the friend keeps giving him 8%. So it's a fixed return. You are guaranteed to get, if it is 100 rupees today, you are going to get 8 rupees in 1 year, right? Let's say it's at 8%. So suppose you invest in equity 50% and debt, which is going to give you some guaranteed return. Now, there are no guarantees in debt also. So just hold on to that point, okay? Because I'm going to explain that. Then what would happen is you see the effect of the market has gone down. So your portfolio becomes smoother. It's going up, but it's maybe going up slowly, but the effect is less. Okay? And suppose it is 25% equity. Now, at the end, you may get lesser money, but it's not showing up because of the scale being broad. Okay, but you will earn less money, but you will also see less of variation in your portfolio. So what diversification does is it makes sure that your portfolio has volatility or the changes, daily fluctuations or monthly fluctuations as per your requirement. I may like to have more volatility. Okay, so that's called as risk management. So I may want that my portfolio should be steady. My portfolio should not lose value every day so much, right? So then in that case, what would happen is then I would want to have less of equity, more of debt. But I want somebody may want that I can take a lot of volatility, okay, and I can have a lot of fluctuations. Then in that case, I need to have more equity. But if I want to be conservative about my portfolio, then what I would do is I would have more debt, because that provides me the steady nature. Now, coming to Akash's point earlier, when he said he can lend money, now you better be careful there, because let's say the friend is not able to pay you back, then you can lose that money. So there is also in debt, you need to make sure that people are able to pay you back the money that you've lent them. Okay, so this is also called as risk in debt, which is called as credit risk, where you can lose the principal because somebody who you gave the money to is not able to pay you back that money. Okay, so this is what is about volatility, and this is the Sensex performance over a period of last 20 years. And if you see the CAGR, which is called as compounded annual growth rate, which is every year how much your money is growing, right? It is 13.6% in the last 31 years. Sensex was 1,000 rupees on 25th July 1990. Okay, and just yesterday it touched 52,475 roughly. Okay, so you see how the value of money has grown over the last 31 years. If you had just remain invested, if you had the patience, you could make that kind of money. So what you need to do is you need to have adequate then regular savings, like we talked about. You need to have diversification to make sure that your portfolio has the right amount of volatility and the risk in the portfolio, and you also need to have patience. Okay, so I want to tell you guys a story about 3 fish. Okay, so these fish lived in a pond, and one was named Plan Ahead, another was Think Fast, and the third one was called Wait and See. So one day they heard a fisherman who was trying to catch fish that he's going to cast a net there. So Plan Ahead heard about it and then said, "Oh, I'm going to swim down the river tonight." And Think Fast said, "I'm sure I will come up with a plan." And Wait and See said, lazily said that I just can't think about it now. I'm too lazy. We'll see what happens, right? So when the fisherman cast his net, the Plan Ahead was able to escape anyway, because the Plan Ahead had gone from there. But Think Fast and Wait and See were caught by the fisherman. Now Think Fast started thinking now, and what it did is that it just quickly rolled over belly up, and it pretended to be dead. So the fisherman said, "Oh, this fish is not good." And then the fisherman threw Think Fast back into the river, in the water. But Wait and See ended up in the fish market. So that is why people say that when in the times of danger, when the net is cast, plan ahead or plan to think fast. So my point over here to all of you is that to do all this, you need a certain planning that needs to be done. Okay, and so just to recap what we have done, we said we established why money is required. We established that we need to save money. We established that we need to invest that money so that you do not lose value of the money by just keeping it, and you beat the inflation, you generate a corpus. And if you generate a corpus fast enough, you can even retire early. You can do things, you can buy bigger things which are probably not affordable right now. Okay, and you can spend on your hobbies, your goals, or of course your needs. And then you also need to make sure that you diversify. You invest in different options, and I'm going to go over those quickly those options with you, and make sure that you diversify enough and you have a long-term horizon. Okay, I hope that is clear to all the panelists. Yes, no, and if it is clear to all the participants, please type yes in your chat boxes. So what are your investment options? Provident fund. So these options are in the increasing order of risk. Okay, that is there. And also keep in mind, general thumb rule: if an investment is risky, you need to hold it longer, typically, to make sure that you get the kind of return that you want. Okay, and you decrease the volatility in that investment. So provident fund, which is typically government offered, where people invest money every month from their paycheck, retirement accounts, and government schemes. So they are guaranteed by government, so they have very, very low risk, actually almost zero. Okay. Then there are bank account fixed deposits, which are also guaranteed by banks, though there is some certain amount of risk, but typically you've never seen nobody has lost money until now, generally investing or putting money in the bank account or fixed deposits. Then there are mutual funds, liquid and debt. So we talked about debt. So these mutual funds, what they do is companies borrow money, okay, either for short term, which is they may need it for only 10 days, 20 days, 30 days, and they may need it for longer term. So when companies borrow money and somebody lends them that money, then they are able to kind of execute on their plan. So somebody would lend them money, and what you can do is you can invest in mutual funds that are lending money to these stocks or these companies, either for short term. So those short term money lending is more for mutual funds, which are called as liquid funds, because they keep lending for very short duration. And then there is debt product, which is for generally longer duration. So you can invest in that. And then mutual funds equity. So you can see that mutual funds, liquid and debt are higher risk than fixed deposits. And the longer the duration of the debt, longer the risk may be. So if you're Akash, you've lent to your friend money for 3 years, it may be more risky because you don't know what it would be in 3 years. He may not return the money tomorrow also, but generally it may kind of add more risk to your portfolio. Mutual fund equities, like stocks, which is made of stocks, mutual funds. Then we talked about home, land, commercial real estate, and then company stocks, listed, unlisted. So let's say if Reva starts a company and she's not listed that company anywhere. So it's a private limited, and she's not listed anywhere, that company. And she may offer that stock to select people to generate or to raise capital. So that's an unlisted stock. But later on, she goes IPO, then it becomes a listed stock. And that's where that IPO is what Advait was talking about, is the initial public offering, where somebody lists the stock for the first time and gives the and existing investors or people who have invested in that unlisted company, they may get some money back, or they will get that growth based on how the companies perform. Okay. Final quiz of the day: when is not good to take a loan? Okay, debt. So we'll just quickly talk about debt, and then we'll wrap up. Results, please. %92% people say that we should not take a loan for going on a foreign vacation. Yes, that's the right answer. Akash, you mentioned about going to college, right, and starting to manage your expenses. What do you think is the right answer, and why is it the right answer?
I think going on a foreign vacation is the right answer for when not to take a loan, because buying a house is sort of a good option, because it is like an essential need. You need shelter, and if you have steady income, then it is a good option to take a loan to buy a house. To start a business is obviously a good option, because the business can generate enough income to pay back the loan or the debt. And paying tuition for college is the same way. You're investing in yourself so that you're furthering your education, and you'll eventually be able to pay back those loans. But going on a foreign vacation is just like an experience that you're choosing to take, which is not necessary, and taking and wasting loan money on that would not be wise.
Rehan, do you want to add to this?
No, I agree with Akash. You don't get anything out of a foreign vacation other than an experience, but from a house you get, shelter. From a business you get a chance to make more money and therefore pay back the loan. And tuition for college you get knowledge, but you don't really get anything tangible or important out of a vacation.
Yeah, okay. So let me explain this quickly. Buy a house, yes, you need a shelter, but you can also house typically will appreciate in value, and it can also be a kind of an investment for you. Startup business, of course, we all know that it will, if it's done right and if it's in the right space, it can create value for you and grow. Pay tuition for college. See, you are also investing in in yourself, and you're investing in future earnings. So because you take, uh, let's say you go to a good college. So for example, Reva, you were talking about that you decided to stay in Ashoka, right? And you can use some of the money that you've saved for your masters, correct? So the idea is that if you invest in some in yourself in the tuition, you are also getting that capability to earn more and do better, right? And save more in the future. Do you agree, Reva?
I definitely agree. I think that suppose my choice to stay in India and go to Ashoka, I think that was an investment in my future and an investment in not only my education, because obviously I believe that education is extremely, extremely important to getting a good job in the future. I also think that it was an investment in my job prospects and like how I'm going to perform in the I think investing in education is extremely, extremely important, and it's something that's worth the loan or the debt that it causes.
So you would want to take a loan or debt for some investment, something that, and of course, when you take a loan or debt, you will be paying certain amount of interest. So you should be earning better than that interest in order to make sure that you, and going on a foreign vacation, of course, it's a need. And don't get me wrong that you should not spend money, but taking a loan to go on a foreign vacation, not a good idea at all. But yes, if you've saved enough, if you have the corpus and you set it as a goal, and instead of going on a, let's say, you go to an exotic vacation and you spend more because you've grown the corpus, by all means, please do that. So what is compound interest? We talked about this, and quickly, if you borrow 1 lakh at 10% compound interest, then after 5 years, you will need to pay 1.61 lakhs of interest. Okay, but let's say, which is 61,000. Okay, and if you, after 10 years, you will need to pay 2.6 lakhs interest, which is 99,000. After 15 years interest, you will need to pay 1.58 lakhs. So you can see that how you're paying more and more interest. Okay, 6.73 lakhs, 2.5 lakhs, right? So compound interest is the eighth wonder of the world. And you know who said this? Mr. Albert Einstein. We all know Albert Einstein. He gave us all the theory of relativity. And if you don't understand it, then you will earn it. But if you do not understand it, you will end up paying. So also make sure that you, as time is the biggest contributor to compound interest. Keep in mind. So as time goes by, you will start paying more and more interest. Okay. So if you take, if you borrow the money for 1 year, then you are paying less interest. But what happens is whatever interest you accumulated or you have to pay or you gave the money, that will also start earning interest. So compound interest is basically earning interest on interest, right? So that's why you need to be careful about that. And this also works in your favor when you have investments, right investments in your portfolio, because now compounding will be happening in your portfolio. And the longer the duration is, the better it is. So that's why, going back to that quiz that we talked about, that patience becomes very, very important in investments. What are the important terms in investments? So we talked about some of the terms. So ETF, which is exchange traded funds. This kind of an investment, which is made out of of some indices like Nifty, Sensex, etc. Debt we talked about is like a loan. Equity we talked about is investing in stocks or part ownership of a company. Mutual funds are instruments that invest in either debt products or equity products. Stocks is direct investment into the part ownership of the company. Insurance is risk management. So quickly, a word about insurance. That typical insurances are life insurance, health insurance, auto insurance. And why do you need to insure? You need to ensure that you need to insure because if there's a big outflow because of certain situations, certain risks are there. So risk can be there on life, risk can be there on health, because God forbid somebody needs to get hospitalized. There may be a big outflow. So what insurance does is you pay a fixed amount every year to ensure that whenever you have this big outflow, the company will pay you that. So you are guaranteeing or you're doing the risk management. Bond is like a companies give to borrow money. Inflation we talked about, which is losing the value of money or general prices going up. PE, PB, market capitalization, AMC, these are typical terms: price to earnings ratio, price to book ratio. Market capitalization is the total value of a company. AMC is asset management company that offers mutual funds. Large cap, mid cap, small cap. Anybody want to explain about large cap, mid cap, small cap? Advait, do you know about that?
Yeah, large cap is like big companies that are doing like really, really good, like Amazon, Google. And mid cap are like companies that are slowly going up. And small cap must be startups.
Right. And indexes are your BSE Sensex 30, Nifty 50. So these are like made of different stocks, which are used to track a certain market or certain theme. So how do you know market is going up? Because the index is going up. And indexes, you create index based on collection of certain stocks to reflect the market, the general trend of the market, right? So that's just to kind of track the market or benchmark your performance. How do you start? You can open an online account. So for all my young investors, you can open an online account for mutual fund investments. Scripbox offers that platform. You can identify 2 or 3 mutual funds which are stocks related with the help of your parents or an advisor. Now you guys are all young, so you can take risks. So you can go for 100% equity also, because you have a very long-term horizon and you're just getting the savings habit and invest. You're learning about investing. So you need not invest in just debt right now. You can just invest in equity and learn from that experience and do it regularly, either from your pocket money or your earnings that you are doing, internships, etc. Put at least 30% of the pocket money or whatever sources you have in these funds monthly. Budget your expenses and avoid buying things on an impulse. So if you want to buy that game today, maybe you can buy a better game tomorrow because you are earning through your investments, and you can. So that's called as delayed gratification. So keep in mind, save first and spend later, right? So we took a quiz about save first and spend later. So make sure that you follow that. And that's where you at least spend, save 30%, at least 30% if you can, if more, even better, and spend later. Create a notional stocks portfolio with rupees 1 lakh. Notional stock portfolio is not actually an investment. You can just create it in an Excel spreadsheet and essentially track the value of that portfolio and see whether you are able to pick the right kind of stocks. And once you become more confident, you can invest in stocks also. So actively manage and track the performance of the stocks portfolio over 2 years. It's not advisable to right away get into stocks if you are a new investor, right? Because you need to kind of learn about that investing. So that's why creating a notional stocks portfolio is good. And rather work with some experts to invest. Because remember, investment is not about gambling. Investment done right, it will grow. It will create a good corpus for you. And the sooner you start, the better it is, right? And these are some of the resources. I even showed one of the video, which was from the movie, The Return of One Idiot. There's a movie called One Idiot Movie. Definitely you should see that. Rich Dad, Poor Dad, where this guy has 2 dads. One is a rich dad and the other one is poor, but Robert Kiyosaki. Kiyosaki, sorry, Robert Kiyosaki. Make Your Kids a Money Genius. Then Secret Millionaires Club. So we started the webinar with that. So it's a series of 26 episodes. We have a lot of financial calculators to understand how much SIP you need, or what SIP you can invest with, what is the retirement calculator. So it'll be good information available for you, YouTube channel and blog. This is the contact information about us. Okay, so I think that was the last slide that I had. Sorry, we overshot the time because of the interruption, but I can quickly take some questions and I can see if help answer with my panelists' help. Okay. So what is automated savings? Reva, do you want to answer that quickly?
I'm not 100% sure, but I guess it's like savings that go in, like something you don't have to do constantly. It's something that's set up as a process that just makes sure that it's on track and that your savings are on track and you're investing in the right manner and at a time increment.
Yes. So that's an excellent answer. Yes, automated savings is that you don't need to go and invest every time. You set up a process where money will be deducted from your bank account every month, let's say, or every week, or whatever frequency you have put, and you will automatically save. So what happens is a lot of people do this automated saving. So before the salary hits their account, the day the salary hits their account, on that day they will have some money being invested, and so that they know. So this is like this concept of saving first and then spending later. Well, can anyone please tell me about crypto trading or investment in cryptocurrencies? I would like to. Crypto trading, of course, is more about bitcoins, which has been in news, gone up 6 times this year. So everybody wants to invest in cryptocurrencies. In fact, we have come out with a note on cryptocurrencies and investing in bitcoins. So please visit our website for that. Beyond that, I think I don't want to say a lot about cryptocurrencies because it's kind of a very volatile asset class, and we are not really recommending it at this point. Can I buy stocks on my own? I'm just 12 years old. Yes, of course, you can buy stocks on your own. But like I said, please do it judiciously, do it prudently. Make sure that you work with an advisor or you know about it. So it's better to create a notional portfolio right now and first learn about the basics of stock investing. Do you want to add a bit on the stock investing?
Not really, like anything specific.
Okay, thanks, Advait. So yes, please, like I said, investing should be done prudently, not treated like a gamble, because markets will not move as per your requirement. So you follow the rules of diversification and create a portfolio, work with your portfolio. How do you balance your immediate needs and future investments when you have limited sources of income? Yes, it's always a challenge. And that's where you need to identify how much you should spend now and how much you should delay later. And that's where an analysis of your needs, which you have to meet right now, and how much, what you can save. And the more you save, what would happen is things will ease out, right? So that balancing is required. It can be done through financial planning. And when you do financial planning, you will know how much you can spend now, how much you can spend, how much you can save, and what investments to put your savings in. And accordingly, you can grow your corpus. So the balance can be achieved through financial planning. What is diversification? I explained to during the webinar that it's making sure that you invest in different instruments so that your portfolio is not volatile. Is not dependent upon one asset class. So it's called as not putting all your eggs in one basket. What is corpus? Good question, actually. Anybody wants to explain what a corpus is? Samriddhi.
Your corpus is basically the amount, or like the amount of money that you set, or like something that grows. It's basically just money as a whole that you have saved or kept aside.
Yeah, hi, good afternoon, everybody. Atul back again. Just to wrap up for everybody, we apologize profusely on behalf of Scriptbox for all the audio glitches. Also would like to thank you for being on the panel, and thank you all the panelists. I hope we all learned a little bit about the importance of savings. Whether you're earning a pocket money or whatever, put some aside, make sure you're saving the money for your future. If you're saving it, invest it. If you're investing it, invest it well, right? And there are multiple investment classes. There are investment classes which have higher risk, which have lower risk. The important thing is that you're saving consistently and investing for the future. In wrapping up, if the panelists want to say, I'll give you each 30 seconds to wrap up on what you learned and your advice to anybody who's listening in. So quickly, over to you, Samruddhi, to wrap up on our behalf. And thank you so much for taking part.
I think I learned a lot about some things like stocks that I wasn't very well knowledge about, like what I didn't know about, and I have learned from this experience quite a bit, and I'm just thankful. Okay. And I think everyone should start making it a habit to save. It'll be good for your future.
Thank you, Samruddhi. And over to you, Advait. What are your learnings, and what do you tell the panelists? What do you tell the other people on the webinar?
I had learned a lot about saving, like how to save, and also investing. And I didn't know what corpus was. I was about to ask, but then you later on explained, so that, yeah, that wraps it.
Thank you, Advait. Rehan, your final words?
It was a very riveting experience. I think I learned a lot more than when I came in first. And my advice is just diversify. Don't put all your eggs in one basket.
Thank you very much. And final words, Reva?
I think that I'm really glad I came, and I'm really glad that I got to learn something from everyone here. I think everyone has very unique experiences, which brings unique perspectives. I think my only advice is save and just do it like wisely. Use people around you that have more knowledge than you. Use that knowledge to grow and make yourself better at whatever you're trying to do, and make that your saving and investment habits better.
Thank you so much to these young adults. We adults can learn from these youngsters. Save regularly, invest wisely. And thank you once again for your time on a Saturday morning. If it was in person, I'm sure I would have gone out for lunch and had a party with you young adults. And thanks once again on behalf of Scriptbox. And thank you, Anup, for being patient with this. Apologies for sort of hijacking the last minute of your...
No, not at all. Not a problem. So I just wanted to say some few words, Atul, if that's okay.
Yeah, I'm done. Thank you very much, everybody. And yeah, have a lovely weekend. Over to you, Anup.
Thank you so much. Thank you, Atul, for pitching in. And sorry to all the participants for all the interruptions today. Couldn't help it. I think we have already gone over what everybody learned, right? All the participants. So I'll not go over that. But thank you, Samruddhi, Reva, Rehan, Advait, and Akash for being part of the panel. You were really enthusiastic, and you showed a lot of energy and curiosity. So this session became very lively, and I loved having you part of this webinar. And Atul mentioned about we would have gone out for lunch, or you would have gone out for like together. So of course we cannot do that being online, but there will be a gift coupon that will soon be arriving at your doorstep for all the panelists. I'm sure you will use it wisely. You can spend it, but you can also save, right? So viewers, if you have further queries, please contact your relationship manager or use our website, scriptbox.com, to get answers. For all your financial investment related requirements, please download our app, do visit us on various social media platforms, and subscribe to our channel, Scriptbox on YouTube. If you've liked this webinar, do talk about it on social media platform. Thank you so much to all the participants for joining us today. We hope to see you again in our forthcoming webinars. This is Anup Bansal from Scriptbox, wishing all of you the best of health. Thank you all the participants. Thank you all the panelists. And thank you, Atul, for holding the fort while these interruptions were coming. Thank you so much.
My pleasure. Do well, everybody. Cheers, guys.